All right, welcome to Next Level, Part 3, Developing Strategy. All right, my disclaimer. I truly believe, and has been my experience, that the more that you learn about successful trading techniques, practice with intentionality while using solid risk management, that you should expect to improve over time. Trading performance boils down to the specific person doing the trading, so therefore I cannot claim or make guarantee that you will make money or be successful trading financial markets. That being said, there are some who should not trade financial markets themselves and should consult a qualified financial advisor. The advice and strategies contained herein may not be suitable for your situation. You should consult with a professional where appropriate. Readers acknowledge that the author is not engaging in the rendering of legal, financial, or professional advice. By reading this, the reader agrees that under no circumstances is the author responsible for any losses, direct or indirect, which are incurred as a result of the use of information contained within this document, including but not limited to errors, omissions, or inaccuracies. Alright, what you will learn in this course. Here in Part 3, you are going to learn how to protect your capital while maximizing your profit potential. You're going to learn how to build your own unique, profitable strategy from the ground up. You are then going to learn how to trade your strategy as a professional trader does. Then, you will learn how to collect data from your results and, like a successful business, apply that data to your strategy to not only constantly improve, but successfully transition with the market environment as it changes. This is how you stay relevant and profitable over the long term. That being said, this course will be built on the back of everything else we have learned from courses Part 1 and 2. If you have not watched and studied them yet, please do so now. Understanding why and how we do anything in trading is just as important as being able to do something competently and consistently. This is the key to internalizing the steps and strategies we use, and in turn trusting them to become our own. This is typically why following someone else's strategy or system does not work, and if you do not understand how it works, you will not truly believe in it, and if you do not believe in it, then you will not trust it. And if you do not trust it, then you will second guess it and stop following it during periods of loss. This completely defeats the point of following a strategy and leads to unnecessary losses. You must make this your own. What makes this different is that I have used universal principles about the inner workings of price action along with tools to help you visualize the critical components behind market behavior. I have tried to lay out things in a non-biased way so that you can see the true benefit aspect of each subject and topic. This must become your own. I cannot overemphasize this. It's the only way that it works. You will see once we start building the strategy all the different things that you can tweak and change to make it something your own and truly believe in. Even if you have a lot of experience, please take what works for you and leave what doesn't apply or help. All right, 4 key concepts of this course. Edge. A well-tested strategy/method that makes money over time. This can be isolated to specific cycles and scenarios, or robust to work in all environments. This is the creative part of trading, and it should be suited to your risk tolerances/profile. Trend following is an example. In your edge, that's a popular trading term. I believe that most of you should know what it means, but just to clarify again, besides the definition that I just gave, your edge is what gives you a competitive advantage in the market. It is what allows you to extract profit higher than just buying and holding on to something. Like I mentioned, the trend following. The idea is, again, that you can make more money after you have developed your strategy and if you had tested it. It shows that you have a positive edge, that you will make money from your trading strategy over time as compared to one that's built and tested and ends up losing over time. So I think that's important to clarify exactly what that means. All right, execution. Consistent execution is critical, primarily for the data collection process, which we will make all future adjustments from. This helps to make the process as unemotional as possible. Lack of consistent execution can boil down to internal factors and red flags that something is not kosher with your psychology. Fear of losing money / not trusting your strategy are 2 common ones. And that was something we kind of went over in significant detail in the mindset course. And so we constantly will need to go back and reference those things. I hope that you took good notes in part 1, but it's there for you to go back and, of course, use the worksheet to continue working on that, because that's a process that we will continue to work on for the rest of our lives, developing our mindset. All right, data. We will use a journal and our execution data to analyze every aspect of our trading. Objective dissection through each piece of the data will help us to identify and work to limit our biggest weaknesses and step on the gas with our strengths. Adjust. The market changes over time and we must adapt. We will adjust any aspects of our trading that will increase profitability and reduce losses, and that includes when and what we trade.